Well, first take a shot at the private equity proposal. She does seem intent on sort of, well, they would say just closing down that industry, if not curbing it.
Right. You know, the evidence shows that private equity exists and flourishes in the United States, in Europe, and elsewhere, not because of tax advantages, but because it's a better model for corporate governance for many types of companies. I think that will last. It will find a way through these tax plans. I think the notion of jobs are somewhat absurd. You know, KKR takes over Walgreen Boots Alliance. That's 415,000 people that work there. I don't think they can take credit for those jobs. And then in concocting these statistics, it's common to say, well, the worker in Walgreens goes to get their car fixed, and the auto mechanic goes to a restaurant, and we'll take partial credit for all those jobs. It's really a form of rhetoric and not economics. I think the industry contributes a lot to our well-being and will continue to do so under the Warren tax plan.
Right. Now, there were those who say really it's benefited a great deal from the tax deductibility of interest through the years, and obviously a capital gain structure that's been extremely generous.
You know, they say that, but if you look across countries, across companies and across countries, you don't find that that's what drives it. It's mostly value added that they seem to create. It's because they can operate in private, take a long-term view of things.
True.
Bring the company back out again.
They do leverage quite a bit. Or those who say the returns, if you levered the S&P, would be similar. Mark, let me come to you. You know, a lot of talk back and forth. Buttigieg may be surging here, but we still are talking a lot about Warren. What are you hearing and what are you responding when you're engaging in conversations about her potential tax plan and what it would mean for economic growth or a lack of it in the United States?
Well, it's big. I mean, there's a lot of moving parts, and that's because she has a lot of different policy proposals. And, you know, I think that's what's important to consider. I mean, if you take any one of her proposals, you know, there's a lot of good, there's a lot of bad. You know, we can debate it. But I think it's increasingly important, given all of the things that she's now put out, that we consider this in its totality. So she has a housing plan, she has a clean energy plan, she has a plan for child care, she has a Social Security reform plan, she has Medicare for All plan, and each of them have tax proposals attached to them. So, you know, all of these things will conflate with each other, have impacts on each other, and to really understand what's going on now, I think we need to consider it in its totality. Picking off one of the proposals, I think at this point would be a mistake to try to understand what she's trying to do and whether she'll be effective in doing it.
But is there any part of her overall that you think would promote growth? I mean, this morning, Jim, Carl, and I were talking about her plan to ban fracking through executive order. Wouldn't seem to me that would be particularly good for economic growth. You can go through any number of other things. All right, maybe the Chamber of Commerce says 26 million jobs. That's certainly overstated. But is there anything in her plan that you think would actually have the ability to increase economic growth?
Yeah, let me give you an example. I mean, take the housing plan, right? We have a crisis in affordable housing. Vacancy rates across the housing stock are at 35, 40-year lows, and they're falling, and it's all at the low end of the housing market. So low-income, moderate-income Americans can't afford to live in close to where they work. So she has put forward a proposal to fund the Housing Trust Fund to help promote more supply of affordable housing in places where we need it, in urban centers where vacancy rates are very low, rents are very high. And she funds that by pumping up the estate tax. Now, in my mind, if you take that proposal, just that one, that's probably a pretty good proposal. I mean, it's addressing a very significant problem, restricting economic growth, reducing mobility of the population, which is key to the strength of the American economy. And she's paying for it. It's paid for, so it's not adding to budget deficits and debt with a higher estate tax. And in my mind, if you want to tax high-income, high-net-worth households, that's probably a pretty good way to do it. That's the most effective way to do it. So that's an example.
Richard, what about when we're talking about the wealth tax? It sounds like now Mayor Pete also has something for unrealized capital gains for the top 1%. Obviously, Elizabeth Warren plan goes into more detail that we've seen so far. I mean, is that something that you agree with that would help redistribute wealth and income in the country?
But in theory, a wealth tax could be pro-growth. It's the people who at those high income, high wealth levels are going to continue supplying the same amount of effort. They don't work to give up an amount of leisure so they can gain more consumption. It's the kind of adventure and a game that they play, and they'll continue doing it. But whether you think it's fair, whether you think it may be theoretically pro-growth, or whether you think the rich will do more with the money than somebody else. I think it's unworkable, and maybe people know that. It would be like measuring an estate tax every year, which would, often Jimi Hendrix's estate from 1970 is still unsettled. And you imagine all of these overlapping, plus the rich will be there with all of their cunning to try to overcome it. And there's the cat and mouse between the rich and the IRS, which is, it's very hard to think how that could ever work. Mayor Pete's plan seems to me to be, I don't know the details, maybe nobody does, but it seems much more practical than a wealth tax.
Yeah, Mark, that's a great point. We talk about these wealth taxes in sort of conceptual terms. No one talks about execution or the litigation, or the IRS can barely close the tax gap.
Yeah, no, I'm sympathetic to that. What I am sympathetic to, though, is we know government is being starved. Government revenue, share of GDP, is as low as it's been in 50 years. It's unprecedentedly low in a full employment economy. We also know that the income and wealth distribution has become more skewed. The top 0.1% control 20% of the nation's wealth. That's double what it was 2 generations ago. So if you're solving for those two problems, then I do think it's reasonable to focus on how do we raise more revenue to fund the things that we need to fund, particularly in an aging population, and address the income and wealth distribution. And in my mind, I don't think I'd go the wealth tax way. I would go, because of all the things Richard mentioned and you referred to, it's going to be pretty tough to execute on that. But I would juice up the estate tax. That seems like a really reasonable thing to do. I'd go back and take a look at capital gains taxes, the preferential tax treatment around that. I'd let these tax cuts that the President Trump gave to high-income net worth households a year or so ago, I'd let that evaporate. Those are the kinds of things I would do to address those issues. But I am sympathetic to the goals here. Government is being starved. It needs more revenue, and we need to address the income and wealth inequalities that are getting worse.